morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Right now, we're all seeing all red across the quote board today as we await the USDA September 1st stocks and annual small grain production reports. Corn right now is 2 lower, 4 lower in the beans, 2 cents lower in the wheat, and just a touch lower in both products. Deliveries against the soybean meal were only 33 contracts, while 454 against the bean oil. U.S. federal government is bracing for a shutdown after yesterday's meeting between President Trump and Vice President Vance, and key members of Congress from both sides of the aisle failed to produce a last-minute agreement. So today's USDA data could be the last we see for a while, as President Trump has threatened mass layoffs or firing of federal employees if an agreement could not be reached. The next USDA production report is scheduled for next Thursday, October the 9th, while Friday's all-important U.S. jobs report could also be delayed or canceled. Yesterday afternoon's crop condition report did show corn ratings held steady at 66%, good to excellent. Still the highest rated crop since 2018. Updated ratings, to me, would imply an average U.S. yield of 182.9 with production at 16,472 million. That's up to 18 million from the previous, from last week. However, still 342 million bushels below the USDA forecast in September. 95% of the corn crop is dented. That's in line with a year ago. 71% of the crop is mature. That's just behind the year ago pace and the 5-year average. However, harvest did reach 18%, below the 20% from a year ago, and the 5-year average at 19%. We did see a 1% improvement in bean ratings, up to 62%, good to excellent there. Pretty widespread improvement, with improvement in 10 states, declines in 5, while holding steady in 3. After declining now for 4 consecutive weeks, this rating improvement did take my model's average yield forecast to 53.6 bushels an acre and production at 4.301 billion. That's exactly in line with the USDA forecast in September. 79% of the crop is shedding leaves, in line with a year ago. Harvest advanced 10% to 19% complete, slightly behind the 5-year average of 20%, but well ahead of well below last year's pace at 24%. Winter wheat plantings at 34%, slightly below the historical average there. This will likely be a very active harvest week here with little to no rain across the nation's midsection. Scattered but mostly light rains could impact the northwestern quarter of the corn and soybean belt late this week into the weekend, with much above normal temperatures persisting into middle part of October. Inside trade for D's corn overnight. Near-term support, the 50-day moving average, 414.5, with resistance at the 100-day at 424 3/4. I've got September 1st stocks at 1.344 billion bushels. That's a few ticks above the average trade estimate and 19 million above the September WASDE data. Higher exports likely to be offset by lower domestic usage. November beans continue to hold at the very low end of its racing range of 10.05 to 10.20. I've got September 1 stocks at 320 million bushels, down 10 million, just a couple ticks below the average trade guess. In addition to the USDA data, today we also get a report from the EIA on biodiesel and renewable diesel production. Also capacity and feedstock usage data from the month of July. The already announced RIN data would suggest a nice bump up in biofuel production here during that month. In a week, just look for some slightly lower winter wheat production and all wheat from the USDA, which we have a tendency to see at this time of year. Thanks for listening, everyone. Have a great day.